I paid my way, and I was defiantly committed to the outcome. So I was up at 4:30 in the morning, whether it come hell or high water, man. I was up, I was working, I was taking in content, I was, doing all those things because I was defiantly committed to making this work. Because the worst thing that can happen is a lot of us get motivated, right? When we had
Yep.
that pain point, we
Yep.
get motivated and it flames out. It's like goal setting in the new year. You go into the new year with all these goals, the motivation is there, and then within
Right.
3 or 4 weeks, we're back to our old little comfort zone.
All right, guys. Hey, today we're going to talk about real estate, right? We're going to talk. I have my guest today is Mr. Timothy Lyons, and let me tell you a little about him real quick. Tim is the host of the Passive Income Brothers podcast. He's a best-selling author, capital raiser, and here's a cool thing, fun fact: he's a lieutenant in the New York City Fire Department. Okay, and he's invests primarily in multifamily and self-storage units, and so he's the co-founder and managing partner of Cityside Capital LLC, a real estate syndication investment company that focuses on commercial real estate assets that yield strong returns for investors. Right, he's been with the fire department, as a firefighter for 17 years. Before becoming a real estate investor. You also work part-time as part-time as an emergency room nurse at Level 1 Trauma Center. So he's the man. Let's just put it that way. All right. So, Tim, welcome to the Practical Wealth Show.
Curtis, thank you so much for that introduction. And I think I like to know that you think that I'm the man, right? Because my kids still think I'm, the annoying dad and everything else. But no, thanks for having me. It's a pleasure to be here.
Yeah, my pleasure. And what we have in common also is I have 3 daughters also. And so mine are I got one is 12 at the time of this recording, 12, 22, and 20. So
a little ahead of the game. Yeah, I'm at 12, 10 tomorrow, and 4.5 going on 24.
There you go. That's a beautiful age.
Yes, sir.
It's still a beautiful age. It's always beautiful, but there are a lot. I coach them in soccer and stuff around that age, and it's fun. So
sure is
good stuff. So so let's talk about that. How are you? Before we get into this stuff, I like to get people to get to know. One of the things I try to do, Tim, on this show, most of our clients are real estate investors, small business owners, or professionals who their goal is what I call work optional income, right? So they want to become financially free, which we define as passive income greater than expenses. Okay, so that's who we're talking to. And so one of the things I try to bring out is success leaves clues. So I want to hear what you do, but I want to hear why in the progression of what took you from, like, you start out with a 3-unit rental. Before we do that, let me go back here. How are you balancing dual careers? That's what inquiring mind wants to know. And with all your hats, as an entrepreneur, the podcast host, and a lieutenant with the fire department, how is that working? Married, kids?
Yeah, I mean, it's a question I get a lot, right? Because it's not every day you hear about an accountant that's also a nurse in a Level 1 trauma center, or, a teacher that's also a firefighter or something like that, right? So people are always like, hey, what do you do for a living, right?
Right.
And I'm like, well, I'm a firefighter. And at the time I was, and I also work as a nurse in a Level 1 trauma center. They're like, wait, what? How does that work?
Right.
And the thing is, at least in New York City, and I'm pretty confident because I've known a lot of firefighters across the country, we work 24-hour shifts, right? Which gives us maybe 2, 3, sometimes 4 days off in between the 24-hour shifts. And while that sounds great to be home and have all that time off, the reality is, especially guys like me, I can't sit still for that long. You kidding me?
Right.
Like I need to
Right.
go do something, right? So a
Right.
lot of guys have businesses. They are a lot of guys are handy with their hands, right? Contractors, plumbers, electricians, carpenters. I'm actually allergic to all those skills, so I went back to school and I got my nursing degree. I like to joke that in college I was pre-med for about 15 minutes until I joined a fraternity, right? So I actually liked that medical stuff, and it served me well, right? I always
Mhm.
had steady work, so I did a 24 in the firehouse. I did 12 hours in the ER. It was two great jobs. No 2 days were ever the same.
Mhm.
Stressful at times, right? A lot of laughs at different times. But you know what? It provided a way for me to support my family. 2 vacations a year, retirement accounts getting contributed to, bills being paid, Santa Claus coming, the whole thing, right?
Right. Right.
Um, but eventually, my wife and I had 3 girls, and I felt like I was trapped. I felt like I was never home. I didn't feel like I was never home. I was never home.
Wow. Okay.
80, 90, 100-hour weeks were the norm around these parts, right? So when the girls are little and they can't talk, then cool. My wife got to stay home for 3 years. While I was doing my thing, but then they get bigger and they
Right.
cry and they
Right.
miss you. And they're like, dude, I haven't seen you in 2 days. Like, I started to feel it. My wife started to feel it. My kids felt it. And it was at that point, I'll say maybe 2018, going into 2019, that I really went down the journey of educating myself on what it was that I needed to do, who I needed to become, what I needed to do, what journey should I set out on. And that led me to real estate.
I'm so glad you said that. One of the things that we always talk about, Tim, is that investing is not about buying something; it's about becoming something. And so it's telling you said, "Who do I need to become?" Because a lot of people fight that. They just want, it's like be, then do, then have. Right? They want to go right to have, or tell
Mhm.
me what to do so I can have. But you talk about the becoming process. How did that process start for you? Working 2 jobs and then okay, I need to learn a new skill so I can basically buy my life back.
So I think a lot of us are taught the accumulation model of wealth, right? You go to school, get a good job, max out the 401k, immediately buy a house once you have a down payment, try to pay that house off immediately or as soon as possible, right? Sock away as much money as you can into your 401k, try to max it out, put anything more into a self-direct, an IRA, right?
Hmm.
And
Hmm.
these are the things that we're taught, right? But it requires us to trade our time for money. It requires us to keep the income actively coming through the door to fund all of those initiatives plus
Right.
our lifestyle, right?
Right.
And that's where people get in what's called the rat race or the hamster wheel, insert whatever kind of, thing you want to put there. But that's how people start to feel, right? And whether they're 30, 40, 50, 60, doesn't matter. Everybody starts somewhere.
Right.
Eventually you say to yourself, man, this is not working for me, or I'm not happy, or I'm not fulfilled, or, there's some kind of pain point where it makes you really sit down and say, well, how do I overcome this? Right.
Hmm.
And that's where people want to start on chapter 20, right? And
Right.
have
Right.
10,
Right.
I want to have 10 grand a month coming in. I want to have 15 grand a month coming in passively, but your balance sheet shows that your net worth is, I don't know, $500,000 or even a million
Right.
bucks or whatever it
Right.
might be. How do you convert that now? Right. And that's the journey of the education that you need to acquire. You need to surround yourself with a tribe that everyone's rowing in the same direction.
Hmm.
Because if you've never done it before, or you don't have a script to run off from your family or your mentors or whatever, you need to get into that lane.
Right.
Because listen, Curtis, I didn't invent real estate, right? It's
Right.
been
Right.
around for thousands of years,
Right.
but there's a set of rules out there that if you follow the rules of the game, you use debt and leverage and cash and equity, right, all appropriately. You do your homework, you do diligence, your underwriting, you keep it tight, right? You're financially educated about money and banking. All these things tend to work out if you follow the rules, right? How about taxes, Curtis? Before, I mean, taxes to me was I'm hoping to get 8 to 10 grand back a year. That was my
Right.
tax strategy.
Right. Right. Right.
You know what I'm saying?
I gotta
Now
get a refund. Right.
I want to get a refund and I want to
Right.
get an ASAP, right? Let's go file our taxes as soon as we have all our documents in place.
Right.
But if you think about it, if you're a W-2 or a 1099 worker, you're spending the first 4 months, maybe even 5 months of your year creating that money to pay the government taxes, right? That's one of our biggest expenses, yet it's something that we're scared of. We don't want to learn about. Our CPA or our quote unquote tax guy, they don't want to go out on a limb for you. But what does that mean, right? Listen, there's 20 billion pages in the tax code, and
Right.
it's all a roadmap for how to use it effectively. So, like, you put all these little pieces together, and I did it, I think, quicker than most, I guess.
Mm-hmm.
I've only been really doing this for maybe four years or so.
Mm-hmm.
But I paid for masterminds, I paid for coaching, I paid my way, and I was defiantly committed to the outcome. So I was up at 4:30 in the morning, whether it come hell or high water, man. I was up, I was working, I was taking in content, I was, doing all those things because I was defiantly committed to making this work. Because the worst thing that can happen is a lot of us get motivated, right? When we had
Yep.
that pain point, we
Yep.
get motivated and it flames out. It's like goal setting in the new year. You go into the new year with all these goals, the motivation is there, and then within
Right.
3 or 4 weeks, we're back to our old little comfort zone.
Man, you talking good. So that's that stuff, because what you call I call it in our system, we call the accumulation theory, right? The because most people have bought into that, and had a couple clients this week where I was like, and they were shocked that they had a lot of assets, but I said none of these send you a check, right? So and that was just blowing their mind. What do you mean I have $2 million and I'm going to run out of money? Because none of this there's not real, using the Kiyosaki term, they're fake assets, right? Is what most of what people are sold, and they don't produce assets. Something puts money in your pocket. And so, but I want y'all to hear the journey. He's committed to the outcome. So it can't be wishy-washy about success, about freedom. And most people just are, yeah, that'd be nice, but and you've got to be, I wake up and my butt is on fire. I have this burning in my gut to win. I'm supposed to win. I have to win. That's not optional. And I think that I don't know how you get them that way, Tim. I think you got to have it, or you don't. But I think the environment, to your point, I want y'all to hear all the points. He's paid money. He got in the right rooms. He stayed in the right rooms. That success leaves clues. And so y'all want, all right, tell me what to do. How do I get this 3 unit? We're going to get to that. But he just told you the important part that y'all never want to hear. So some of y'all want to hear. That's why y'all listen. But Tim, that is fantastic. I could hug you because you said everything I say.
Let's do it. I'll hug you anytime. Listen, and just to stack on top of that, I want to put the final cherry on top of that accumulation model, right? So now you go through your entire life. You had that pain point. You had that friction in your belly, right? Or that friction inside your head of, I should have been doing something different. I should have been, whatever, right? Now I have regrets, right? Because now when you're 65, we're sold this bill of goods saying, listen, you play like a good boy for all this time in your life. And when you're 65, you too can peel off 3 or 4% from your 457, 401k, 403b, right? You're gonna be making less money in retirement, so you're gonna be in a lower tax bracket, so your taxable liabilities will come down, right? Well, who the hell wants to be poor in retirement? Like a dollar today is worth a dollar. A dollar today is worth more than a dollar tomorrow. I think in the last 3 years in inflation, we've all kind of understood now. Oh, that's what they mean with inflation.
Yes.
Got it.
Yes.
Right.
Yeah. It's not static. Like you're paying somebody for you to be poor. Like the advice that you're going to be in a lower tax bracket, you're not going to lead as much money. Yes, you are. And you need to, and you can't build. There's that whole nest egg. I'm gonna get. I wanted this woman. I said, listen, you think you had $1 million? This was literally yesterday. $1 million. Would you be able to retire? She made a little over 100 grand. And less than 30 grand saved. It's like, I was like, do you think if you had $1 million? So one, she's not going to get $1 million in 15 years. Okay. But I said, well, all right, so let's use the safe, what they call the safe withdrawal rate, 4%. I said, what's 4% of $1 million? 40,000. So you're already less than half of what you make, and you're not even going to get that. So, and then I said, all right, look, how would you, because I want to give you advice for new investors. The next question I want to ask you, I'm setting you up for that. But I said, well, how much? But she was trying to do real estate, but it was still kind of wishy-washy. You know what I mean? And just from her tone of voice, and I think you gotta, because I what did I say to her? I said, listen, so let's do, how much you think you can get in rent? She said, I don't know about. She said anywhere from $500 to $1,200. So let's do 600. And I divided that into whatever her monthly income was. I said, well, you need about 16 properties. You know, and she frowned her face. I was like, what? What are you, you know, she started frowning, 16 properties. I was like, dude, I mean, let's say you do that over 10 years. Let's do a year. I said, that's your retirement plan. Like, I don't know, what do you want to have happen? So I kind of had to be Coach Curtis for half a second and let her have it. Cause I was like, you know, you're not thinking right, you know? And, so anyway, so let's talk to the new investors. So you had a test, what'd you call it? Proof of concept with the 3-unit, and then talk about how you built up. And then I want to transition into your syndication model and, you know, what you guys are doing there.
Cool. And look, you know, people look to real estate as like this panacea, right? This cure all for like all their problems and cash flow. And it can be, it certainly can be, right? But it's not going to be easy. It's not going to be overnight. And it's a process and there's a prescription. And if you follow the orders, you too can be successful, right?
Yeah.
And there's a billion ways to make money in real estate. So it's getting clear, right? And we'll get into all this. But for the brand new investor, like, look, I think what you just talked about with that investor from the conversation yesterday is key. You have to take what you have and put it down on paper. You have to take the assets and the resources available to you, whether that's time, whether that's capital, whether that's relationships, network, know-how, skills, whatever it might be, and put it down on paper, right?
Yeah.
And then we need to start forecasting, right? Here's what's available to me now. Here's where I want to be. And then you need to back into it, right? So if you need 2 houses a year, well, what does that look like? Are you investing in Philadelphia? Are you investing in Montana? Are you investing in Florida? You know, and then, that sounds overwhelming. Well, guess what? That's where you need to start going, right? Get educated on investing out of state. Get educated on building a team, on, you know, property management, on how that works. And, you know, get educated on taxes and cash flow and, you know, all these things, right? And LLC. Well, what does an LLC mean, right? People, I want to start my own business. You know, all right, cool. You're going to do an S corp, an LLC, a sole proprietorship, and they look at you like, you know, what does that mean? Well, guess what? That's business right there, right? That's understanding how, you know, how does income come into those entities and come out of it, and what's liabilities and assets, like all those things, and it could be learned. Listen, if Tim the fireman, Tim the ER nurse can learn this in a matter of years, 4 short years, and be where I am today, then believe me, you can do the same exact thing.
Right. That's awesome. So talk to him about your brothers works with you and y'all have a show. But how did you go from all right, we're going to buy some stuff to now we're going to scale that? Yeah.
So look, I mean, that first 3-unit, right? I'm in New York. I bought that in New Haven, Connecticut, right? Because in New York City, it's really hard to cash flow. I'm not saying it's impossible. Really, really hard to cash flow. And unless you have big money, right? And you could buy a big property, and, you know, but I didn't have big money. I was a small fish. I was also insanely scared. Limiting beliefs was my middle name. Investing out of town was like completely made my knees buckle. And I didn't want to do it by myself. So I brought a friend along, a guy that I knew for a long time, and we wanted to do it together. We were both scared together. We were both going to struggle through this together, and both of us couldn't hang a picture on the wall if we tried. So perfect. Let's do this together. We bought a house, a 3-unit, for $276,000, $6,100 a year in taxes, and it needed a new roof. It needed siding. And upon takeover, the first floor tenant was going to be moving out, and we needed to rehab that unit. So taking all that into consideration, it's just a math problem, right? You put all that on paper and you get financing. At the time, we got a 10-year note on a commercial loan because we bought it in an LLC. Not in our personal name. If you buy it in your personal name, you're able to tap into that traditional 30-year fixed rate mortgage from a bank or a lender. But we did a 10-year note through a local savings bank because we bought it in a LLC. We renovated the first 4-unit. We brought some friends and family along. We bought some beers and wine and pizza, and we rifled through that first 4-unit. And we started renting it out in about 30 days. Immediately, we were cash flow positive, right? Awesome. Great. Right. And I spent of my money, I spent about
with
50.
a 10-year note.
Yeah. A 10-year note at
Okay. Yep.
4.5%. Yep.
Yeah. Okay.
And a 20-year amortization schedule.
Oh, okay.
Um,
Okay. Here we go. All right.
so, so yeah, I mean, so we were cash flow positive. We had a new
Mhm.
roof on, new siding, right? And believe me, I talked to a lot of folks before I, took the plunge into.
Mhm.
But I spent about 47,000. He spent the same, right? And that was for the purchase, that was for the renovation, that was for the roof, that was for the new HVAC system that had to go into the third floor because it was
Mhm.
installed improperly and everything else. All the little things that come up after a takeover. But we were immediately cash flow positive to the tune of about anywhere between $400 and $600 each per month,
Wow.
right?
Okay.
Depending on,
Mhm.
and I was like, holy cow, right? And then I did better on my taxes that year because I had some write offs finally.
Right.
I'm a
Right.
W 2 worker, right?
Right.
I'm a W 2 guy. I don't have any material write offs, right?
Right. Right. Right.
So then I had the proof of concept. My wife had the proof of concept. The problem, Curtis, was that I bought myself a third job and it was an hour and a half away from my house. Hour and
Mm-hmm.
a half there, hour and a half back. Who's shoveling the snow? Who's raking the leaves? Oh my God, something's wrong. Whose turn is it to go up there, right? So it became a third job, and that's where people get jammed up in real estate. They're like, man, I don't have the skills, I don't have the time, but I want the cash flow, I want the tax benefits, right? I want the appreciation potential. And those are the reasons why people get into what I do now, which is more passive investing in larger apartment communities, self-storage facilities, industrial properties on a triple net lease basis. And there's going to be more to come going
Mm-hmm.
down the line, but
Mm-hmm.
that's how we figured out, listen, my pain point was not, I didn't want to be active, but I wanted to participate in real estate. Then it opened me up to the world of syndications and private placement investing. And, there's a whole world out there. And I said, wow,
Mm-hmm.
that's where Cityside Capital, my company, was born.
Okay. Is do you still is all of your investing through that? You do some of your own stuff outside of Cityside, or you just kind of manage it all together?
No, because I like to joke now that I'm actively passive, right? I get to sit in
Okay.
the front seat and see financials and profit and loss statements and T12s and rent rolls, and I get to see the underwriting and the debt terms, and I get to say, wow, that's a really good deal, and I'm going to put my own money in that deal. Not
Mm-hmm.
only am I going to invite my investors to take a look at it, but
Mm-hmm.
I'm going to invest in it too because then I can have the confidence, right? Because I've already done the heavy lifting. I've already done the due diligence on the operators that I'm working with. Now
Right.
I'm doing the heavy lifting on the deal by deal basis or the fund basis. And once I feel good about that, I can put my money in and then I can collect the monthly check or the quarterly check. And I can read the reports, right? I don't have to lease out the units. I don't have to, fix the leak in apartment 201.
Right.
There's a team for that, right? And do I get paid as much as if I did it myself? Well, no, but I still get the cash flow, I still get the tax benefits, right? And I still, at the end of the project life cycle, whether it might be 3, 5, 7, 10 years, can look at hopefully some a good potential appreciation.
Right.
So I mean, that's why
And
it
you get
works
your
for
life
me.
back. You got your life back, so you can enjoy the time with your wife and kids. That's the
That's
most
right.
important part. You want to be financially free. That's the see. A lot of people don't really. What's the word? They're not clear on what they want. Like they just heard they want to invest, but they don't. In one of my favorite books by Kiyosaki is Rich Dad's Guide to Investing.
Hmm.
And he talks about, investing is a plan. I always tell our clients your financial plan precedes the investment or the business plan, because what do you want and why is the financial plan, right? How do you play defense, and mitigate risk? All of that's the plan. And then real estate's the vehicle. Real estate is the
That's
asset
right.
class. Business is the asset class. And I think people think they're one and the same. They're just chasing money, chasing returns. And I'm glad you brought this out, because I try to slow people down and think about what you want. How do I become? What's the even if you're putting money in syndications, you still need to, because I find people still take the I don't need to know anything approach like they do with a mutual fund when they're just, and I think that's I don't people don't really know how to do due diligence on the operators, on that kind of stuff. Can you speak to that a little bit, and how they? I've just seen a couple. Yours actually a little more regular. I want to talk about that too. But what have you learned about that kind of stuff as you've been doing this?
Yeah, so that's my bread and butter right there. You just set
Mhm.
me up with a softball pitch.
Okay.
I just want to stack on top of what you were talking about, your plan,
Okay.
right? If you're not clear about what you want, if a ship leaves the harbor, right, and they don't have a coordinate to put their bow and face that coordinate, right,
Hmm.
they're not gonna make their destination. They're just gonna like go around the sea and they have nowhere to go or aim, right? That is what you need to keep in mind every single day. Where am I trying to go, right? And the thing is, I used to think, oh, if I had $5 million, man, I'd be rich, man. I'd be all set. If I had 2 million, if I had 10
Hmm.
million, whatever it might be. Well,
Hmm.
guess what? What do you do with that? Do you just get 5 million and start peeling it off, right? Peel it off, peel it off, peel it off. Well, then you're gonna have zero, right? You're gonna buy a Mercedes, you're gonna buy a
Right.
house, you're gonna do
Right.
this, you're gonna pay for your friends and family, right? How many NBA or professional basketball players or professional athletes or singers or they lose everything because they don't have a
Yep.
plan, right? So that was one thing. Due diligence, right? The way that my company became to be, because I am highly skeptical of everybody and everything, right? As a New Yorker, everybody's guilty till proven innocent in my eyes,
Right.
right?
That's funny.
It's and I want to touch the real estate. I want to mow the lawn. I want to shovel the snow. I want to be
Right.
able to be the guy, right? And that's called a scarcity mindset, right? And when you get into the abundance mindset, you realize there's a lot of the pie for a lot of people, right? And how do you get into that? So with due diligence, right? Everybody thinks that they know how to do due diligence. Let me ask the people out there, like, when's the last time you read a 10K report from any stock that you might own in your Robinhood or, Betterment account or your Fidelity account? When's the last time you read a quarterly report? When's the last time you hopped on an investor call? Like, probably not, right? You
Right.
just kind of go on
Right.
your phone, you click in, you click out, and you see your balance. That's not due diligence. That's not anything, right? So when it came to private placement investing in real estate, right, you're really giving up your control. You're giving up decision making. You're not picking the paint colors. You're not shoveling the snow. You're not choosing your tenants, right? That's
Right.
all up to the operator.
Right.
So how do you vet the operator? And that's
Mm.
huge. That's where
Mm.
Cityside came in, right? We got our securities licenses, right? We aligned ourselves with a broker dealer that only did private placement investing in commercial real estate. So
Wow.
because we did that, we had access to best in class operators, and we used a third party due diligence firm that did bad actor checks, criminal background checks. Did they own the properties they said they owned? Did they dispose of the properties they said they disposed of, right, on their track record?
Hmm.
Was it for the same price that they said they bought it and sold it for? Are there any tax liens? Are there any kind of collections liens, anything like that? Because you want to know who you're getting into bed with for the next 5 years, right? You want to
Right.
know who you're putting your hard earned money with for the next 5 years, but is the average Jane and Joe investor going to know how to do bad actor checks, right? Probably not.
Not
You know,
exactly.
if you had a liquidity event or you have an inheritance and now you're like, you know what, I want to see what these investments are like. What do? Do you hop into Google and put in passive investing real estate, and whoever has the sexiest, cleanest website, is that who you go with? I mean, how do you know that they're good? How do you know that they have,
That's
so
what they
this
do,
is
though. You know that, right? That's
yes,
right. Right.
yes. Listen, with Chat GPT and all this AI stuff, I mean, you can make a pig look really, really cool and nice,
Right.
right?
Right.
Like
Right.
so, and that's where that's my world, right? My
Yeah.
world is I'm cheap, right? I didn't come from money at all, and I want to know that where I put my money is actually like a safe. I feel safe, right?
Right.
So
Right.
so we decided to do a deep dive on due diligence. We have a third party underwriting firm that we use to go through their past deals. Were they, up to snuff? Everybody's underwriting is conservative. I have news for everybody. You'll never hear somebody who's trying to raise capital say, you know what, my underwriting is a little iffy. And we took a little liberty here and we took a little
Hmm.
liberty there. No, it's conservative. Well, what does that mean? Is it within industry standards? Is it good for that asset class? Is it good for that market, that sub market? Are we comparing apples to apples and oranges to oranges, right? And I don't know about you, but if you don't come from the underwriting world with spreadsheets and cap rates and net operating income and expenses and P&L sheets and balance sheets, right? If you don't
Right.
understand all that, you need somebody who can break that down for you, right?
Right.
Um,
Right.
So that's us, right? So we do the underwriting. We do underwriting checks. We do due diligence checks. We do bad actor checks. Um, a lot of times we'll do a site report where we'll actually go out to the property and, walk the property, talk to the tenants, talk to the property management company, before we start feeling comfortable enough that we're going to raise millions of dollars from investors to get into one of these deals.
Right. That's awesome. Like, because I'm looking at your background. I noticed this while we were talking. It's like, wait a minute, you went from 3 units to partnering on 6,000 units. All right.
Correct.
So worth $1 billion in less than 3 years. All right. So you talk about scale. That's incredible. And so that's, and so what I want to show you, and he invests his own stuff. So he eats his own cooking, but how is that mentally, like, growing that fast? I mean, what lessons did you learn on scaling that fast? Because that's a lot of growth.
So I wish that I owned that all by myself, but I don't. Right? I have
Right.
my company. We are general partners in a piece of each one of those properties. Right. So I did the first 3 unit with a partner, but now I'm partnering with bigger, more experienced firms, and we're buying 2, 3, 400 unit properties at a time. Right. So when you do that, and we've done 26 deals over the last say three or so years, at 200, or 300 units at a time, that's how you can scale to say 6,000 units.
I did say partnering, but probably the way I said it, they missed that part. So I'm glad you slowed that down.
Yeah, because people say, "Oh my God, oh man, you must have like a private jet," and I'm like, no. There's no private jets here, But yeah, so because we listen, you either have the deal, you have the money, or you have the know-how, right? There's 3 things that really make any kind of real estate deal go. We can help solve the money part. They bring the deal and the know-how, right? So that's how this whole system works, right? Because everybody needs capital to do these types of investments. They need the equity, right? In addition to the debt. And that's something that we work through, right? We don't want to be over leveraged. We don't want to be, listen, the real estate assets, they work. We know they work. The reason why they fail or go sideways is because of the structure of the deal, the debt terms, the operations, the overarching company, running the property or something like that. The real estate works. The people need a place to live, right? Clean, safe, affordable place to live. People need self-storage, right? We have stuff out there, right? There needs to be. People want to buy things on Amazon. Well, guess what? That all gets done in manufacturing plants in industrial properties. Like, these things all work. It's the structure of the deals, and that's what we're trying to help investors understand and say, look, we've done all that heavy lifting. Here's where we feel like there's opportunity.
Where do you see that? Like, so, because you'll hear stuff like, the cap rates are low and interest rates are high, and all, it's like, oh, real estate is about to be in a recession. But I've heard it's always a good time to buy. There's always deals out there. How should they be thinking about this? And let's say over the next 3 years, 5 years, 10 years, what opportunities, or how do you see the future for your business and for investors?
So that's a big question, right? Because there's so much happening right now. But just like dollar cost averaging into a S&P fund or a NASDAQ, triple Qs, whatever it might be, like there's a way to dollar cost average into real estate. You know what I'm saying? It's not called dollar cost averaging for some reason, but there's always opportunities out there. Right now in the commercial space, like residential, 1 to 4 unit, right? A single family home, a duplex, a triplex, or a quad. 1 to 4 unit, residential rental properties can qualify for that 30-year fixed rate debt, right? With a bank, a credit union, something like that, right? When you get to 5 units or more, you have to go to commercial lending, right? And now that's either 3, 5, 7, or 10-year, or 12-year notes, right? With a 20, 25, or 30-year amortization schedule. So it's different, right? So a lot of this stuff that was bought in the last couple of years, when cap rates were low and prices were high, right? Because they're inversely correlated,
right?
They were bought with, variable rate debt. Right. Because we just came from, 15, 20 years of zero bound interest rates.
Right.
And there was feeding at the trough like no other. Right. And asset prices got inflated and everything else. But guess what? when the music is stopping because the Fed just raised rates to 5.25, 5.5, right? And now people need to roll over that debt. They need to refinance that debt. Maybe they took a 3-year note or a 5-year note, and now it's coming time to refinance. Wow. Imagine going into a deal at 3% and now it's 7%. I mean, that makes your deal not pencil anymore. There's no more cash
Right.
flow.
Right.
There's
So
no
like
more
that.
debt
Yep.
service,
Yep.
coverage ratios are not, so that's where there's going to be problems. That's where there are problems right now. So that's where the opportunities are for companies like us and our partners to scoop up deals, because there's going to be some distress in the markets. Does that make sense?
Completely. Yeah, I was thinking that. I was like, okay, look, because I heard that part of it, right? And then I'm wondering, okay, they can't refinance, or the financing doesn't work. So I guess, somebody's, so they can't do it. And somebody needs to come save them, okay, out of this deal. And that's where the opportunity, it's always, opportunity. And so, one of the things is sounds like what y'all do is you have to run towards ugly situations that most people are running from. So, get your firefighter background. Okay.
I'm used to running into ugly situations,
Right.
But here's the thing, it was really easy for us to raise capital over the last
Mm-hmm.
couple of years, right?
Mm-hmm.
Because it was high time on the town, right? Real estate's doing great. Everyone feels rich, right? Their 401ks are booming. Everything is good. There's a mantra out there that, the time to make money is when there's blood in the streets. I think, I don't know, Warren Buffett said that, or
Yeah.
Charlie Munger, God rest
Mm-hmm.
his soul, right? He just passed away this week.
Yeah.
But when there's blood in the streets, and that means there's uncertainty, there's people losing jobs, there's debt service coverage ratio issues, there's inflation, there's a ton going on. That's not the time. Like right now, when people are scared, people aren't saying, man, I should go get some real estate deals. There's got to be some good deals out there, right? Because now we're trying to just save our principal and get them into, money market accounts yielding 4.5% or something like that, or buy treasuries at 5%, right? Because we're looking for safety and security. But, when the opportunities are presenting themselves in a time like now and into the next maybe 2024, we'll see what's going on, right? Those are some of the times, in my humble opinion, that there's opportunities to capitalize on some of that distress.
If you know what you're doing. So again, it goes back to becoming, right? And so as your knowledge goes up, your risk comes down, because it's not risky for you, because you know what you're doing, and you can see it. That is, boy, you just, there's so much stuff layered in what you've been saying. I hopefully y'all get the clues out of this. But Tim, so tell them, I want you to tell them two things. Tell them a little about your show, so they can figure out how to kind of follow what you're doing, and tell them a little bit about Cityside Capital and kind of what you're doing and who you help.
Yeah, thank you so much. So we finally got off our butts and we started our podcast called the Passive Income Brothers Podcast, because if you've learned anything today, the idea of life is to settle into your 5 freedoms, right? Financial freedom can lead you to time freedom, can lead you to relationship freedom, right? To have relationships with who you want, when you want, and on your terms, right? Freedom of purpose, right? For you to go do whatever it is you want to do. You want to coach your kids' teams, you want to do charity work, whatever it is. And then finally, it's geographical freedom, right? Live, work, and play where you want, when you want, on your terms, right? But it all starts with having that monthly income being at least what your monthly expenses are, but if not 2xing that, right?
Right.
So anyway, so on the Passive Income Brothers podcast, we talk about these things. We talk about investing, mostly real estate focused, but we've had guests about oil and gas and notes and land and all sorts of things, and self-directed IRAs, and we've had accountants on talking about stuff. So it's a lot of them. It's a lot of the stories like that. We have successful entrepreneurs, that everyday folks just like myself, who have maybe taken that action. And then there's a little bit of mindset and psychology kind of, woven in through that, personal growth and development. So that's at the Passive Income Brothers podcast, and you can get that anywhere podcasts are listened to. And then finally, Cityside Capital, we're a small private equity firm that focuses on multifamily, self-storage, and industrial triple net lease assets across the U.S. with best-in-class operators. And we're happy to work with accredited investors, or not. We have some room for some non-accredited folks. But yeah, I mean, just that's what Cityside Capital does. I'd be happy to talk to anybody, who has some interest in passive investing.
Tell them. I mean, really, if you don't know, you you probably are not. But tell them what a credit investor is. Yeah, just
Cool.
with their
Yeah.
web. Yeah.
So basically, in the private investing world, there's some rules, right? There's deals for what's called an accredited investor, and then there's other deals that are made for accredited and a certain amount of non-accredited folks, right? So,
Mm-hmm.
an accredited investor, there's really three main criteria. The first criteria is that you have a net worth north of $1 million, and that's not counting the
Not
equity
in
in
your
your
house. Right.
your primary residence,
Mm-hmm.
right? So a lot of us feel rich when we go to Zillow and we see our home price and we're like,
Right. Right.
wow, yeah, but you can't use that, right? So it's north of $1 million. Number two is you personally make $200,000 or more, and you've done so for the last 2 years with the expectation of making that or more going forward, or 300,000. This is the third way, with
Mm-hmm.
you and your spouse if you file jointly, right? So there's other ways though, right? If you hold a Series 7, if you hold a Series 82, there's different ways, and they're actually talking about revamping the accredited investor definition at the SEC level right now to include testing, perhaps, or taking a class or something like that.
Hmm. That's good stuff. Yeah, I think I think it's good to know that, because see, a lot of people when they start, and I got this idea from Laura Langmeyer. What people don't realize when they go into business, or let's say they're in network marketing or start a business, the goal is not to go and create lifestyle, is to become a credit investor, right? So you can get into really cool stuff that we can't even talk to you about by law. Okay, that you're not even supposed to hear. And see, so we talk about the rich get richer because you don't know the game, and you need to get out the rat race, and you need to educate yourself. And because too many people I've found they're looking for a home run, and that's and don't want to do the work, and you want to hit a home run, and
Mhm.
that's a recipe for disaster. So
So just to tack on top of that real quick,
yeah,
Obama in
yeah,
2012 passed something called the Jobs Act of 2012, and you said it. If you weren't in these circles, if you weren't at the country club, the yacht club, if you weren't in those circles, you didn't hear about these private opportunities because this is
right,
what they were doing, right? This is what they've been doing for decades and eons, right? But because you weren't able to market these deals, you were never even aware that they existed. In
right.
2012, that changed, right? There's more of a democratization of these types of private equity deals. So now it's under Regulation D, Section 506 B and C, right?
Mm-hmm,
The 506C deals can be marketed to accredited investors. So you might see it on your feed, you might see it on a billboard, you might hear it on the news channel, whatever it might be. It's
mm-hmm.
because it's only in the last 11 years that we're able to do that.
Wow. Okay, that's good stuff. How can they follow you? Like give out your website or the name of the show again, and we'll put it in the show notes.
Cool. It's a Passive Income Brothers podcast. You can email me, Tim at citysidecap.com, our website, citysidecap.com, and I'm on all the social media channels.
That is perfect. Tim, anything I should have asked you? This is my catch-all. Make sure I didn't mess up. Did anything I should have asked you, or any closing thoughts for our listeners before we go? I really appreciate it.
Yeah, look, I mean, I don't know when this episode is going to come out, but we're recording this right in the beginning of December of 2023, right? We have 30 days to close out the year. Where have you been this year? Take some inventory. If you haven't made the right decisions, no problem. 2024 is a new year. Start getting your ideas out of your head onto paper. Let's make a plan. This sounds complicated. It sounds overwhelming. It sounds like I don't have enough money. I don't have enough resources. I don't have enough time. I don't have enough education. All those things can be solved for, right? If Tim the fireman, Tim the ER nurse can do it, believe me, guys, you can do it too.
All right. Listen, I'm gonna let that be the last word. Tim Lyons, thank you so much for dropping some serious gems on the Practical Wealth Show today. I know you helped a lot of people, so make sure y'all follow him, listen to him. If you qualify, call him or email him. Okay.
Absolutely.
And if not, then you need to work with me so I can get you there. So I get you ready for him.
Love it.
And that's what I do, right? And so, guys, thank you. Go out there, make it a profitable day. Take action. Most of this show is filled with writer downers. Okay. And so you need to go back, you need to list this a couple times with your notepad out, because he dropped some serious science for y'all. So I appreciate it. And I'm doing the interview and I got a page of notes. All right. So Tim, thank you. Guys, go out there, make it a fantastic day. And if you like this and you know somebody that needs to hear this, share it with them. Okay. And leave us a like or a comment. And make it a great day, everybody. Thanks for listening.